Welcome back to Tip TV Finance with an old friend of Tip TV, Matt Lofgran, is the CEO of Nostra Terra Oil and Gas, and I believe that the company may be crossing a certain Rubicon. Is that correct, Matt?
Well, I hope so, Zach. Thanks for having me over, by the way.
That's all right. I know it's a very ungodly hour in America at the moment, but it's worth it for Tip TV.
Yeah, no problem.
So what's going on there?
Well, we're excited about where we are right now and the future ahead. I think you're familiar. We've just closed the asset recently, the Pine Mills acquisition over in East Texas. We acquired 80% interest, includes operations, so meaning we're the operator, giving us control of the asset as far as timing, cost, etc. So it's a good little asset. It's producing, so we don't have the risk as far as exploration risk. We do have upside, however, with development, with some lower hanging fruit with workovers and reactivations of existing wells, and then we've got some development opportunity, and then there also is some exploration upside as well. We haven't talked much about it at this point, but it is there.
So the Texas asset is what you think you got it at a good price. I think you gazumped somebody to get that that particular asset, and this could be a new dawn, let's say, for Nostra Terra.
Well, yeah, and I want to be clear. I mean, we don't think the future is necessarily just this asset, but we think it's a very good asset as we build the foundation. My opinion is that it's a very cyclical market. We're somewhere at or near the bottom, and I think a lot of people have sensed that we've turned the corner and oil's on its way up. Although there'll be some toing and froing, of course. But I think it's a good time to be buying assets. It's the same in the stock market. You want to buy low and sell high, and here we are. We're buying assets on the cheap. So we pick up an asset that's cash flowing pretty nicely. We've improved the operations since we've taken over. Our main focus has been on cash flow, increasing production as well, but primarily the initial focus was driving the cost down, keeping our operating costs lower.
And what kind of production, is it too early to forecast any production levels at this stage, or what they may be this time next year, let's say?
No, we won't forecast that at this point, but when we acquired it, it was producing approximately 100 barrels a day.
Right, okay. The other point that I wanted to talk about was the Chisholm Trail. It sounds very romantic. I'm not quite sure it's quite as romantic up there as sounds, but that was the asset which I first sort of found out, was familiar with Nostra, with that asset. What's the story there?
Well, we've just sold it. Right now in the market, you're seeing assets that are selling for somewhere around your PDP or your production value, and you're not getting much value for your acreage, your undeveloped, any reserves of any value except your production. So you get a typical discount to your cash flow on your existing production. That's the kind of thing you're seeing in the market around in the U.S. There's a few areas that are hotter than others, and one thing that we've always said, if you look back at the different interviews and our RNSs, we've talked about the stack pay, and we like areas of stack pay. Pine Mills is one of those, by the way. But Chisholm Trail had some stack pay and is also in the play that's known as the stack. So the stack is one that's exciting. It's hot, and we felt that we were able to get a nice premium over the PDP or over our production, our existing production. So we've been able to get into the asset, develop it with our partners, and benefit from the cash flow from the production, and then turn around and still sell it at a premium to its current valuation or its valuation at the time. Which is also a profit for us. When we sold it, the market was around $40 a barrel, and we still sold it and made money for our shareholders.
Right, so it was basically clearing out not deadwood, but something which could resources which could be better used elsewhere.
Well, yeah, I mean, we also were in a position, it was a non-op position, several wells, a lot of different operators, all non-op, and we sold what was effectively 50 barrels a day, and rolled that over to what was our 80% of 100 barrels a day, 75%, puts you at about 60 some barrels a day. So we sold a whole bunch of non-ops and then basically traded or rolled that in, took our cash, paid down some debt, used the existing cash, bought an asset that we own 100% or have 100% control over, 80% interest, and has higher production levels with more upside.
Well, I mean, the bull argument says that you're actually now, the company's Nostra's in a better position than it was, let's say, 6 months ago or a year ago, but the share price is about half that value. Do you think the market is a bit slow in cottoning on to your merits, let's say?
Oh, definitely. I mean, we had a market cap of $1.5 million, approximately $1.5 million sterling before the acquisition. We did the acquisition. We did that without any dilution to shareholders. We turned around and announced an adjustment to our Chisholm Trail sale, getting us another $600,000, approximately another $500,000. So you'd expect that just off of the additional sale, the non-dilution, and no additional assets being sold, that we're turning around and we should go from $1.5 million to $2 million just off of that alone. And here we are, we're just around $2 million, but we've got an asset that's producing. We've put out a reserve report on that where you've got about $2.6 million on just your producing, on just your developed reserves. Okay. So it's a wonder why it is where it is, the share price right now, but the market will catch it eventually.
Well, I'm sure we'll see that. Matt Lofgran, CEO, Nostra Terra Oil and Gas, thank you very much for speaking to us from America, and obviously give our regards to the future, the next president when he gets into office.
You bet. Thanks, Zach.
Thank you.